What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel focuses on the bullish semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be used to trade any company that's publicly traded in the US stock market. Make sure you hit the subscribe button and the notification button. That way you're alerted when we release new videos. We release videos Monday through Thursday and once on the weekend, but we do release bonus content from time to time. So you want to make sure you're notified when we release that bonus content. Our nightly and weekend videos focus on identifying triggers and targets for trades ranging from scalps and intraday trades to long-term swings and leaps. If you want a deeper dive into how we set up our charts and trading levels, check out the bonus content on our YouTube page. And for more information about the strat, which is the base of our charting and trading method, you can find more free information in the description of this video. Let's go ahead and look at today's agenda, or this weekend video agenda. First, we're going to recap Friday, October 3rd's price action. Then we'll zoom out to look at the week, month, quarter, and year. Then we'll take a look at the market maker's expected move for this coming week of October 10th. And we'll zoom back in to set our 4-hour markers and the triggers and targets for Monday and the week ahead, as well as a review of the triggers and targets for the month, the quarter, and year. So just looking at today's intraday price action, we did open with the slightest gap up, pushed back down to close the gap pretty quickly, and pushed back up. Nothing really to be had on the 5-minute, but if you wanted to get in real early, and you were on the 1-minute, there was a higher low on the 1-minute for a bit of movement. So you had the high here and then the higher low right here, so you could have entered at, once price action went above the first candle's high, or basically the overnight high. If you entered there, you had the higher low here excuse me, and the higher low here. Once you got the lower high here and the lower low, then you would have gone ahead and exited. So a little bit of movement, about 30 cents of price action that you would have caught if you were following the rules and didn't get, just all the way from the bottom to the top. It was a good 30 cents of action. So if you were at the money, in the money, and had a good number of or a decent number of contracts, I don't even want to say a good number of contracts, but a good number of contracts, then you had a decent profit right there. But the real action was to the downside, as we know, or if you weren't able to watch price action today, the real move was to the downside. And we could see here on the 15-minute, actually we'll just go back to the 5-minute real quick to show that there were no real higher lows above opening print. And we opened right here, this 39.48 right here at this hourly broadening formation, this 15-minute broadening formation. Overnight high was right here, previous high day was right here. So you had to know that this was going to be probably a chop zone in between this 39.75 and 39.32 was probably going to be a chop zone. So we needed to really be patient to wait to see which way price was going to discover. You could see here on the 5-minute, you got the lower high right at opening print, and then as soon as it went lower low, you could have entered puts. You got the lower high here, and you could have taken it down. We got to about half gap. We've talked about half gap before. If you're familiar with this channel, if you're not familiar with the channel, halfway through the gap is known to be a bounce point. Excuse me. From a short-term perspective, a lot of times a gap is not just going to fully fill all the way, or I don't want to say a lot of times, but a good number of times that the gap won't fill all the way, and you can look at that basically the half line of that gap as a possible bounce point from a short-term perspective, and you can see that's what we got here. Even getting the lower high, it came back down and gave a higher low. This was on the 15-minute. If you didn't want to be this zoomed in, you could have taken the lower high here on the 15-minute right at price level, opening print at 39.48, and you could have caught the move to the downside. The 15-minute, you would have had a further a bigger stop loss than if you were watching the 5-minute. So this still put in a lower high on the 15, but then this did put in a lower high. This put in a higher low. We got another lower high, so probably would have wanted to exit a majority of your position, all of your position if you were holding 0 days, but a majority of your position if you have next week's expirations or the monthly expiration. and you could leave a couple runners. Seeing how the day did end, kind of weak, it went flat, but it didn't push back up to opening print or even get above overnight low. So we can see the money today was to the downside, so kudos to those who were able to get puts. We can see we almost made it down to the market maker's expected move low down here at 37.27. That would have been another possible bounce point, but it probably would have been again just on a short-term time frame. If we got that low, I would have expected the gap to pretty much close. So almost got there. If you're not familiar with the market maker's expected move, watch the weekend or the Thursday night videos. That's where we go a little bit more in depth into the market maker's expected move. But again, that's what we had from the intraday perspective. Just looking at it from the day perspective, let's go ahead and bring out the. There we go. Bring out this chart, and you can see where we had this 11 weeks of sideways action. We popped out of this range, gave a little intraday test of the top of that range, and basically have been off to the races since then. So even though today was a red, bearish engulfing candle, or a red 3 if you're a follower of the strat, it's not the end of the world. Even with the gap below us, there's always room, because today was a 3. From a day perspective, we could go 2 down on Monday, especially if we get some type of hammer and even finish green. We don't necessarily have to finish green, but if we push down, form a wick towards the bottom, and then a hammerish body at the top, that could trigger a 3, 2 down, 2 up on the day perspective, and that would be just another higher low in this uptrend that we're in. So we're hitting these broadening formations. This purple one is a weekly. The orange ones are dailies. If you're not familiar with this channel, make sure you check out the bonus content on our YouTube page, the breakdown of how we set up our charts, and you get a little feel for the different colors we use for the different time frames, so that they're easy to reference when we're looking at the charts, because we don't use a bunch of EMAs and things like that. This is about as busy of a chart as you're going to get, unless we're talking about an intraday perspective. We've got a couple of Fibonacci's just really marking the high, midpoint, and low of the quarter and the month. And some broadening formations. So we need these different colored lines to know just real quickly what we're looking at, so we don't have to keep zooming out and zooming back in. But we're running into this cluster of daily broadening formations with this weekly broadening formation, so it's reasonable to expect some type of pullback. Doesn't mean it's the end of the world and we're going to make lower lows. We'll worry about that if we get to that point. But to start out, we're just looking at it's perfectly reasonable to look for a higher low in this sequence, in the uptrend of higher highs and higher lows. So just be aware of that. We've got still got the government shut down, so we'll see what types of economic numbers are released next week and what aren't. And if the government opens back up, do they catch back up with the numbers they didn't release this week, and how all of that plays out. But we'll have our triggers and targets ready for both the upside and downside. But that's a good look at how we finish the day. Let's look at how we finish the week out here. Let's go to the week chart, and we can see we got another good solid 2 up, and we closed above last week's high. So we've got a higher low in terms of the low of the candle, and we've got a higher high in terms of the high of the candle to the previous candle, and we've closed above the high of the previous candle. So those are all pretty bullish signals. A little bit bigger wick on the top than there is on the bottom, just barely maybe. And so that's nothing bearish, but it does show that we did have the initial price discovery of, above where we closed, but it did push back down, and you can see how that's aligning with this weekly broadening formation. So again, that doesn't mean we're going to turn down and go make a lower low and start a weekly broadening formation to the downside. It just means that we're probably going to run into some type of corrective activity, sideways action, possible pullback. So just be aware of that. We were, mentioned that in last night's video, and we were ready for the downside action today. Made a good little chunk of money. So we can see that from the week perspective, things are still looking good. From the month perspective, same thing here. We started out with the bullish engulfing candle 2 months ago. We closed out with this really solid 2 up or solid bullish candle here. Excuse me, going above the previous month's high, almost making the magnitude of this three, combo two down, combo two up, where the magnitude was 36.15. We reached that 36.15 very quickly this month already, and we're looking for that higher high of 41.19. So again, we've completed this three, combo two down, combo two up. We've reached the high of this three, so now we're looking for the next high in that downtrend that we had in late 2024, early 25, and looking to reach that as well. Got some gaps above, but they're quite a ways away. So we're gonna have our work cut out for us. We're running into this broadening formation, running into some higher fib extensions. You can see the 100% fib extension of this April low to July high, back to the July pullback. This fib extension here, we've got 43.80. So do things slow down a little bit here? We've been on a tear the last 5 or 6 weeks, and so again, just more than reasonable to expect a little bit of a pullback. Again, from the quarter perspective, we're looking really good, especially if we stay above that 36.15 level, because that 36.15 triggered the one combo two down, combo two up, which again, the magnitude for that move is not the high of the one, but the high of the candle to the left of that one, which is 70.08. So as long as we're staying above this 36.15 level, things are looking bullish from a quarter perspective. If we pull back below that level, then we're looking at some type of inverted hammer, and possibly at least to start the quarter out. And if it would continue, then there would be a possibility of this being a lower high on the quarter perspective and getting a push down in first quarter of 2026. But again, that's just keeping that in mind. Doesn't mean it's going to happen. We just need to be aware of what can happen in either direction. So that's what we're doing. But right now, everything is looking pretty bullish. So stay above that 36.15, and we're looking real good. The year, once again, we mention every time, we've turned it around. We made a higher low so far, right? We had the 1, 2 up, 2 down trigger this year. It did almost reach magnitude. Magnitude was 621, went to 723. So from a year's candle structure, we've got a higher low. If we continue to push up and then get the 2 up next year, that locks this in as a higher low. So again, started out not so great. We ended 2024 not great, and started 25 out not so great. But we've really turned things around, and kind of have to be living under a rock to not see the growth that we've had this year from that April 7th low, right? So that's what we've got from the everything from the short-term perspective to the long-term perspective. We'll look at the market maker's expected move. We can see with our new notes for Monday, October 6th, there'll be 59 trading days left in 2025 on Monday. Today closed at 38.23. We don't know what the week flip is yet. We'll have to wait for the week to open, but we do know what the month, the quarter, and the year flips are. So we're still green on all of those levels. And then when it comes to this market maker's expected move, we've got an expected move of plus or minus $3.99 next month. Now we get that number. This is using TradingView. If we just go to, I'm sorry, not TradingView. This is using Thinkorswim. I don't know what I'm thinking there. Using Thinkorswim. If we go to the October 10th, October 3rd should be off of there. You can see there's nothing there. But if we go look at the October 10th options chain, and we go over to the right, we can see that there's a plus or minus $3.99. And so that is what the market maker's expected move is. So if we go back out to the chart, and let's just pull up the 4 hour, maybe. Make things easier, or just the 1 hour. There we go. We can see that we closed again today at 38.23. So with the expected move of $3.99, that gives us a high, our market maker's expected move high of $4.22, and a market maker's expected move low of $34.24. Now you can see how those come into play, because now this is not how the market makers come up with the levels, but you can see how the levels that we use in particular align with the market makers expected move, the fringes of that range. This 42.24 is the 78.6 fib extension, again, of that the dip low. What day was it? October. I'm sorry, not the dip low, but the October 1st. So Wednesday to yesterday morning gap up, right? So this was Wednesday's move, and then the gap up to yesterday morning. If we use that and look at the pullback that we had, the fib extensions of that flag, we can call it the 78.6 is that $42.22. And if we look at what the the month and the quarter flip are, which we always keep track of, what would flip the month red and what would flip the quarter red, that's down here at this 34.24. So you can see how those levels come into play and why we leave them on the chart. So here's a little bit clearer view without those fibs on there. We can see this move on Wednesday, the gap up on Thursday. So if we take that move, retrace it, and put those fibs out, that's how that 78.6 lines up with this market maker's expected move high, and we can see how the month and quarter flip align with this market maker's expected move low. So again, that's not where price is going to stop. We can see this week, if we go to we can see this week the market maker's expected move high was 37.23, and we were above that both yesterday and today. So it doesn't mean price has to stop there, but it is a level that you want to know about, because a lot of the time price does stay within that range. So I think we've gone over the market maker's expected move enough there. Let's go ahead and look at the oops, that's a crazy chart. Let's go ahead and look at the scalping chart for Monday. Set our triggers and targets, right? So we have here the 4-hour markers, the previous high a day up here at 40.06, I believe it was. And then the overnight high so far is 38.38. The overnight low is 37.79, and the previous low of day is 37.62. So if we take out the right tool here, and let's say over the weekend and by Monday morning, overnight high has moved up to here, right? And let's say that price opens here, right at this hourly downtrend line. Well, if we get price opens here and we get a push down, and then say maybe a little bit of a bounce, but we end up getting a lower high at or below this opening print level, then we want to be entering puts, just like today, right? That's how we were able to get that move to the downside. We took that lower high at opening print and we rode it on down to the half gap fill. So if we get that lower high underneath the opening print, then we want to get the puts. First target being overnight low, second target being previous low of day, right? So if overnight low over the weekend ends up moving down, past previous low of day and is down here, then of course the first target is going to be previous low of day, second target is going to be overnight low. If we get price action, we open here and we push up and say we reject off of overnight high and we pull back, but we get that higher low at or above opening print, then we want to enter calls. First target would be the overnight high, second target would be previous high of day, right? So if price action goes beyond those points, then we turn to our 4-hour triggers and targets and our day triggers and targets, which we'll go over here in a second. But from a scalping perspective, especially at the very open of the day, that's how you can kind of get in on earlier plays. If you want to look at the 1 minute, 5 minute, you can get some of those earlier jumps and get in and get out and get some profit real quick. And if you have enough contracts and you're at the money in the money, then you might be done at the very beginning of the day. But that's just part of the proven method that we have, the repeatable method that we have. It's the same rules every day, and it pays off pretty well. So let's go ahead and look at the 4-hour chart for more of a day trade, right? If we look at that, we can see that we had the 3-2 down today. And so that does set us up. Now the candle is red, but it did form more of a hammer type of candle. We've got the more wick to the downside than we do upside. So if we do push up tomorrow and clear the high of the second 4-hour candle from today, that triggers the 3-2 down, 2 up. Now the magnitude for that move is the high of the 3, which is 40.06. But if we get the action to the downside, that's a 2 down, 2 down continuation, and we're going to be first looking for that gap close. Now, if that triggers, that also triggers a combo 2 up, combo 2 down. So the magnitude of that move is going to be the low of this candle, 35.76. But we can see right here at 36.82, just below the gap close, is the week's 50% line. And we know, or we've talked about plenty of times in the past. Let's go back to today's. You can see how this week we got the push up, rejected initially off of the high, the previous high, and we got the test of that 50%, and that's where we took off, right? So the same type of thing can happen next week. We could get the down day on Monday, or even just a down morning, get price action to close this gap and then bounce off of this 50%. But if price, if we get some sideways action, price correctiveness, and it shows another lower high and it triggers, looks like we're going to trigger to the downside, I would perfectly be fine entertaining puts to close this combo 2 up, combo 2 down magnitude at the 35.76. All right, so that's how things look from a more of a day trade perspective. Looking at more of like a swing, or day trade to overnight swing perspective. Again, we got the on the day chart, we got a bearish engulfing 3. So there's no reversal that we can have off of this. All right, it would take the 2 down or a 2 up, and then the next sequence of candles to create some type of reversal candle. There's nothing really off of a 3, but it is a bearish engulfing candle off of a weekly and daily broadening formation. So we could expect to close this gap. Even if we go past the gap, and then push back up and close in some type of hammer pattern again, that would set up a possible 3, 2 down, 2 up. And especially if it's a green hammer, it may be worth your while to swing some contracts, some call contracts overnight to see if we get the 3, 2 down, 2 up. Magnitude would be back to this 40.06, which was the high of today. Now, if we get action to the upside, the same thing. We have to think about the same thing. We're still running into this broadening formation. We haven't got a higher low above it yet to kind of say, okay, we're done with this one. We could get the push up tomorrow. On Monday, and then especially in the morning, and then push back down, and by the end of the day we have an inverted hammer, and that sets up a 3, 2 up, 2 down, and it may be worth your while to swing some puts, right? Especially if it's a red inverted hammer. So things can go either way on Monday, and you can expect a possible reversal midday or towards the end of the day, and a severe reaction to the opposite direction of whatever price was moving in earlier on that day. So just keep that in mind for Monday. If you are going to swing overnight, it does set up some possible 3, 2 up, 2 downs, or 3, 2 down, 2 ups, right? So that's what we've got from the 4 hour and the day perspective. We'll just go over those numbers here real quick. So if we do go to the downside on the 4 hour, that technically triggers the combo 2 up, combo 2 down, triggering at 37.62 with the our first target, actually, before we get to the magnitude, would be 36.98. Now I bring that up for a couple of reasons. That's the gap close. That's the 50% of last week, and we are in a strong uptrend. So it's perfectly reasonable to expect that after the gap is closed, we could reverse and go back up. But if we continue moving to the downside, then the magnitude of that move is 35.76. All right. If we get the price action to the upside, that triggers the 3, 2 down, 2 up. That triggers at 39.01 with a magnitude of 40.06, an extended target of 40.89, 41.19, which is that magic number we've talked about previously. If you were not familiar with it, you'll be familiar with it at the end of this video. 41.19, and then the further extended target of 41.83. From the day perspective, like we talked about, this needs to be a red 3. From the day perspective, we talked about to the downside would be a red 3, 2 down, triggering at 37.62, having targets of 36.98, which is that gap close, 35.49, 35.15, and 34.17. I included kind of a lot of extended targets for the day just because of the rather thin structure that we have to the upside from Thursday and the gap up from the movement big price action Wednesday, and then the gap up on Thursday. So there's some thin structure out there, like they say, stairs up, elevator down. So we could see a quick move to the downside, a deep, relatively deep move, right, compared to what we've been seeing. and that could reach that 34.17 level. Anyway, back to the upside, we would have a red 3-2 up triggering at 40.06 and would have a target of 41.19. Again, that magic number coming in here, 41.19, and extended targets of 42.24 and 43.80. All right. So to avoid dragging this video out too long, we already went over the week's chart, the week, month, quarter, and year chart. If you want to review those again, just rewind the video. But for now, we'll just go over the triggers and targets. So for the week, if we go to the downside, that does trigger a 2-up, 2-down reversal. So that gives us a very clear entry, very clear exit, right? So trigger of 33.57, exit or magnitude of 31.36. A decent move. $2 for SOXL at this price is a decent move, but you could see that in a matter of 1, possibly 2 days, right? So if magnitude is reached and there is continued movement to the downside, then the extended targets would be 28.92, 27.43, excuse me, 27.43 and 26.57. All right. Now, if we go to the upside on Monday or this coming week, that would trigger a 2-up, 2-up continuation, very clear entry at 40.06, and then we would have targets of 41.19. Again, that magic number coming in here on not only on the 4-hour, the day, and the week. We'll see how it comes into play on the month and quarter as well, but that 41.19 is the first target. Then we'd have 43.80 as the second, and 46.79 as the third, as the second extended target for the week, right? Again, if you need to see that chart, go ahead and rewind the video. We do have the chapters identified in the video, so you can skip just to that specific part. From the month perspective, again, we have triggered the 2-up, 2-up. So as long as we are above 35.49, we are in force. The first target, 36.15, we have already reached, as well as the 39.45. The 41.19 is the magic number that we've been talking about, right? So that's that third extended target from the month perspective, and this is where the bonus content comes into play. I'm going to do another video this weekend to release the further extended targets for the month, as well as some different extended targets here for the quarter, right? So again, that 41.19 is the magic number. That's what we're really looking to hit there. So be on the lookout this weekend for the bonus content with the extended targets for the month and the quarter perspective. I just wanted to get this video out with the core of everything, so as many people could get it as they could over the weekend, right? Not everybody has all the time in the world to watch these. Some people only have a certain amount of time, so I'm trying to get it out there early enough for those people. All right, so that's what we have from the month. From the quarter, again, rewind if you want to see the actual chart, but we have triggered the 2-down combo 2-up. We have actually reached magnitude on that. That was the 36.15. So the 1 combo 2-down combo 2-up has triggered. The magnitude of that is 70.08. That's a pretty big move. So we've got some intermediate targets in between there. The first being 38.89. We've already reached that. Second is 42.04, and then 44.54. Again, with a bonus video that we'll put out this weekend, we'll have the further extended targets for the quarter perspective if we just continue to move on this bullish tear, right? From the year perspective, again, go back to the video if you want to see this chart, but from a numbers perspective, we did trigger the 1, 2 up, 2 down. That triggered at 23.50 earlier on in the year. The magnitude was 621. We didn't quite get there, but in April, we hit that 723. So from that perspective, we have created a higher low. The price action has created a green hammer candle on the year so far, so we look to have been turning things around. I don't expect to get a bullish engulfing candle on the year. That would trigger at 70.08, so that would be a long ways to go in the next 3 months. Could it happen? Possibly. Will it happen? I don't think so. So, but if it does, we have our extended targets, but if it does, that'd be a truly bullish year, and we'll probably look for some continuation into 26. But that is it for this weekend video. Again, stay tuned for the bonus content that we'll release. We'll try and get that out as early as possible Saturday morning, but we wanted to get this one out by Friday night so that it was out as early as possible on Saturday morning. We've got some things we've got to take care of tonight and tomorrow, so we just wanted to squeeze that in there. But if you enjoyed the video and you've made it this far, thank you very much. I truly, it's crazy how this channel has kind of grown. I expected it to just be a little niche channel. I mean, in a way, it still is, but we're almost to 500 followers and or subscribers, and I was just thinking that we would be talking to maybe 100 or so people. I just wanted to get this trading and charting method out there, along with the nuanced layer of the scalping and day trading perspective, and it seems that there's been plenty of people that have enjoyed it, and so giving that thumbs up just helps the channel grow even more. We're just trying to give as much free information and education as possible, and it seems that some people are liking it, so we'll continue doing it. And make sure you have a good weekend this weekend. Don't think about just the charts all weekend. Get in some good time for yourself, some me time, some family time, some whatever it is that makes you happy. Do that this weekend. That way, you feel refreshed and ready for the trading week ahead next week. And we'll look forward to seeing you out there on Monday. We'll get the bonus content out as soon as possible, and everybody enjoy your weekend.